The current price for Strive Inc., trading under the ticker symbol ASST on the Nasdaq, is $16.31 as of the market close on Friday, May 1, 2026. During that final session of the week, the stock showed significant strength, climbing by 6.18%. While the broader indices were grappling with mixed signals, Strive managed to pull off a gain of nearly $1 per share, closing near its daily high after an intraday low of $15.70. The immediate reaction to this movement usually involves looking at the technical indicators, but the real story here is a massive divergence between institutional skepticism and a hyper-aggressive corporate pivot that most of the market is still trying to wrap its head around. While most firms are focused on traditional AUM growth, Strive has effectively turned itself into a leveraged bet on a digital treasury, recently acquiring another $60 million in Bitcoin to bring its total holdings to over 14,500 BTC. This isn't just a side project, it is the core of their valuation now. If you are expecting a standard asset management play, the reality is that you are looking at a structured finance company that uses Bitcoin as its primary hurdle rate. This creates a fascinating tension because the market narrative still treats them like a small-cap fund manager, but their balance sheet is starting to look more like a technology-driven treasury. Standard expectations for a firm like this usually center on expense ratios and fee income. You look at their ETFs or their advisory services and try to find a path to profitability through traditional means. But the reality is that Strive is intentionally disrupting its own model. By adopting a Bitcoin treasury strategy, they are signaling that they don't believe in the long-term stability of the dollar-denominated reserves that their competitors, including major names like Fidelity or Interactive Brokers, typically hold. They recently moved $50 million into preferred stock instruments like STRC to capture yield while maintaining liquidity, which is a move you almost never see from a firm of this size. It suggests a level of sophistication in treasury management that usually belongs to much larger entities. If you are looking at investment sites or using the Robinhood app to track these moves, you might see the volatility and get spooked. The stock has a beta of over 15, which is essentially off the charts compared to the S&P 500. This is why people using a robo-advisor or a SoFi Invest account might find Strive excluded from their automated portfolios. It is simply too hot for most algorithms to handle. Yet this is exactly where the opportunity lies for self-investing individuals who are willing to look past the surface-level noise. I want to hear from you guys in the logic of the market. Comment below how many shares of ASST you currently hold, or if you think a Bitcoin-centered treasury is too risky for a public asset manager. When we look at the recent stock movement, the daily swings are primarily dictated by the underlying price of digital assets rather than the performance of their managed funds. Institutional activity has been a mixed bag, but we are seeing specific names like Mike Alfred taking million-share stakes, which provides a floor for the price that wasn't there 6 months ago. The trading volume has been healthy, averaging around 3.6 million shares, which means there is plenty of liquidity for those using an individual brokerage or the Fidelity mobile app to get in and out. The momentum in the sector is shifting toward these proxy stocks, companies that allow you to play the digital asset market without having to manage private keys yourself. This is the same reason people look at Nvidia stock or Tesla stock. They aren't just buying a product, they are buying a specific vision of the future. Now, to understand why this stock is behaving this way, we have to look at what the company actually does. Strive was founded with a clear focus, maximizing shareholder value by ignoring social and political agendas. They launched a suite of ETFs that prioritized excellence over ESG metrics, which quickly gained traction with investors who felt sidelined by the major Wall Street players. After merging with asset entities to go public, they leaned into this anti-consensus identity by making Bitcoin the center of their corporate universe. They are essentially telling the market that if an investment doesn't outperform their Bitcoin hurdle rate, they won't do it. It is an incredibly disciplined, albeit high-stakes, approach to capital allocation. Their business model is split between the traditional asset management segment, which manages over $2.5 billion and provides a steady stream of advisory fees, and this new aggressive treasury segment. The earnings reports have been messy because GAAP accounting requires them to mark their digital holdings to market, leading to massive paper losses or gains that don't always reflect the actual health of the business operations. For instance, they recently reported a significant net loss due to unrealized digital asset fluctuations, even though their operating income in specific divisions is growing. This is a classic trap for investors who only look at the bottom line on a screen without understanding the underlying assets. If you compare Strive to the offerings from Fidelity Investments or the Schwab Intelligent Portfolios, the contrast is night and day. Those platforms are built for stability and broad diversification. Strive is built for concentrated high-conviction growth. It's why analyst sentiment is so divided. You have firms like TD Cowen initiating a buy with a $26 target, while others are essentially telling clients to stay away. This divergence is the expectation gap I mentioned earlier. The market expects a fund manager to act like a bank. Strive is acting like a hedge fund with a public ticker. Looking ahead, the catalysts for ASST are almost entirely tied to the macro environment and the adoption of digital credit. They are positioning themselves to be a leader in what they call the meritocracy-first economy.
If we see a shift in government legislation that favors their specific niche, or if the digital assets on their balance sheet continue to appreciate, the upside is substantial because the current market cap of around $1.19 billion doesn't seem to fully account for the value of their holdings plus the brand equity they've built. However, the risks are equally sharp. A prolonged downturn in the tech or digital asset sectors would put immense pressure on their liquidity, especially given their aggressive acquisition strategy. For those of you using a Fidelity brokerage or an Interactive Brokers account for stock trading, Strive represents a unique tool in the toolkit. It isn't a set-it-and-forget-it investment. It requires a deep understanding of how they are using their treasury to drive value. Unlike buying a Fidelity mutual fund or even a standard ETF, buying ASST is an endorsement of their specific management style and their willingness to be the contrarian in the room. In summary, the expectation for Strive is that it will struggle to find a middle ground between being a fund manager and a treasury company. The reality, as evidenced by the recent price action and institutional interest, is that they are successfully carving out a new category of public company. They are leveraging the volatility that scares off the average investor to build a balance sheet that is fundamentally different from anything else on the NASDAQ. Whether you are using the Robinhood app for quick trades or Interactive Brokers for a more technical approach, you have to respect the sheer audacity of the move. The central insight here is that Strive isn't trying to beat the market at its own game. They are trying to change the game entirely by redefining what a corporate treasury should look like in a high inflation environment. They have moved from a small cap experiment to a billion-dollar player with a clear, if controversial, path forward. If you can stomach the swings, the narrative of reality exceeding expectations is very much alive here. We are seeing a company that refuses to play by the rules of the old guard, and for the savvy investor, that is usually where the most interesting stories begin. Watch this $17 resistance level closely in the coming days, as a break above that could signal a new phase of institutional accumulation. Always keep your eye on the hurdle rate, because for Strive, that is the only metric that truly matters in the end. This is a play on leadership, a play on digital assets, and a play on the refusal to conform to the standard corporate mold. It's a high-wire act, but one that is currently being executed with surprising precision. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.